every time a data point comes out, and especially coming on a day, another batch, another data dump, if you will, right after we heard so much from the Fed chair, Jay Powell, yesterday, who kind of seemed to indicate that maybe we could get a soft landing. Based on the data points that we're seeing, do you think that might be the case? Because we still have strength in the labor market, right?
Right. The labor market would support that. I think the consumer spending data that we saw this morning would also support that. I think it's a fair hope to hold out for. And for what it's worth, there are still many prominent Wall Street economists who give a pretty decent chance that the U.S. doesn't enter a recession at all. Granted, it is most people's base case, and a lot of people will hedge that by saying that it would be a mild recession, if any, but there are still plenty of economists who agree with Powell that the soft landing is possible.
But it is interesting, Molly, because when we saw the manufacturing data come out this morning, we saw markets move lower as soon as that happened, and it got me thinking, well, okay, maybe this is what the Fed wants to see, but at the same time, it does express a potential cooling of a certain part of the economy that may concern some people if growth like that comes down. Are we being too optimistic in reading into it?
I mean, look, there's two sides of the same coin with this, and I think when you're seeing this slowdown in manufacturing, it is definitely consistent with the disinflation that we've been seeing in the goods sector. The problem where inflation is still very strong is more in services. So when those metrics come out as tracked by ISM and S&P Global, I think that's really more where people are looking for more substantial cooling.
10 seconds, Molly. What's the next economic data point we should keep an eye out for?
So jobs tomorrow would be the biggest one, and I think we're expecting to see a moderation in payrolls growth, the unemployment rate to hold. So that's definitely the next big one on the agenda right before the Fed meeting in 2 weeks.
Molly Smith of Bloomberg News, thank you so much. Really appreciate it.
Let's get world and national news. Nancy Lyons standing by in Washington, D.C. Hey, Nance.
Thanks, Tim. President Biden and French President Macron both say they share the same values, and during discussions today found many issues they can agree on. But there are some touchy issues, too, like the recently passed Inflation Reduction Act that Macron calls protectionist. President Biden admits it could be better.
There are occasions when you write a massive piece of legislation, and that has almost $368 billion for the largest investment in climate change on all of history. And so there's obviously going to be glitches in it and need to reconcile changes in it.
Biden says he'll have his team work with Macron's team to coordinate changes to reach a more unified approach. Baseball Hall of Fame pitcher Gaylord Perry is dead at the age of 84. Reports say Perry died at his home in South Carolina from natural causes this morning. He was inducted into the Hall of Fame in 1991 when he gave this speech.
Every baseball player dreams about being a big league baseball player, and now here I am in the Baseball Hall of Fame. For me, that dream has finally come true.
Perry played for 8 teams during his 22-year career, including the San Francisco Giants and the New York Yankees. At the World Cup, underway right now, Spain is leading Japan. Germany is ahead in its game against Costa Rica. Earlier today, Croatia and Belgium played to a draw. Morocco defeated Canada. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C., our bureau there. So among the stories that definitely caught our attention, and I don't know if this will come up in some of our conversations today, but it's something that we certainly focused on a lot. We know the Bloomberg Terminal user certainly does, and that has to do with the Wall Street bonus season.
Yeah, whenever there's a story about bonus season or what bonuses will look like or what they were, it tends to move to the top of the most read on the Bloomberg Terminal. This one, no exception. Jefferies telling staffers that the upcoming bonus season will be a, quote, difficult one following a volatile year across Wall Street. Here's what CEO Rich Handler and President Brian Friedman said in a memo to employees on Thursday, quote, "As always, we will do the right thing for the long-term success of everyone at Jefferies. Let's just spell it out here. This is going to be a more difficult compensation season at Jefferies, just like it will be for every firm in our industry." All
right, so here's what's going on, and you know it. We talk about it every day. First of all, the M&A environment has really slowed down this year. We've had a couple of years, record years, very strong years when it comes to the advisory business. We've seen IPOs slow down. That is a big part of the incentive numbers that totally come out. Persistent inflation's also pulling them down, and the threat of a potential recession. So check it out. Bankers advising on M&A are likely to see their bonuses decline as much as 20% this year.
And their counterparts in underwriting will probably have the biggest drop, with their incentive pay slumping as much as 45%. That's all data according to Johnson Associates Incorporated.
What's interesting about this, if it's across Wall Street in terms of bonus cuts, then maybe people stay put. If it's not, then that's when you start to see movement again, where people are like, wait a minute, I didn't get a bonus this year, then maybe I start to think about going somewhere else. And you do sometimes see that movement after bonus season.
I know this isn't the primary point of stories like this, but these do have unintended consequences in some cases. If compensation comes down across Wall Street, which many argue is way too high anyway,
Right.
What does it do for taxes in the city and state of New York, for example? And how does that ripple throughout different economies?
Yeah, it's tax implications, certainly. There's spending implications. We often talk about that there's not those big bonuses to spend on, whether it's real estate or different things. So certainly something to consider. All right, coming up, we're going to check in on a story in the current issue or upcoming issue of Bloomberg Business Week. That's coming up. This is
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We have got stocks trading mixed. The Dow is lower, S&P is lower as well, but NASDAQ holding on to a gain right now of about 19 points, up by about 0.2%. Seeing a lot of instability right near a key technical level. That is the S&P 500's 200-day moving average. The S&P down by a point again, little change. The Dow lower by 184 points, a drop there of 0.5%. All of this post-Powell and ahead of the jobs report, and of course, complete coverage tomorrow morning, 8:30 a.m. Wall Street time. When the number drops, we'll have it for you right here on Bloomberg Radio. 10-year yield, 3.53%, with the 2-year yielding 4.25%. Spot gold up 1.9%, 18.02 the ounce, and West Texas Intermediate crude up 0.9%, 81.26 a barrel. Lots of earnings coming up after the close of trading today. Among some of those names, Marvel Technology. We'll be hearing from Ambarella, Zscaler, and also Ulta Beauty. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening and watching Bloomberg Business Week live from the Stanford Graduate School of Business. We'll have more from our site in a moment. But in the meantime, we want to get to the new issue of Bloomberg Business Week. It is out on newsstands. It's online at Bloomberg.com/businessweek. And, of course, it's on the Bloomberg terminal. And a great story by our Matthew Boyle, who covers everything when it comes to the workplace. And I think we're still trying to figure out life after pandemic. And it still kind of includes Zoom, but also some competitors to Zoom.
I was going to say, we're trying to figure it out as workers, and there are also companies that are trying to figure out when it comes to their employees, and other companies that are trying to figure out what it means for certain products that they're building. Along with Matthew Boyle, we have with us right now Joel Weber. He is the editor of Bloomberg Business Week. He joins us on the Access line from Brooklyn. So, Joel, I was talking to someone recently who reads a lot about the future of work, doesn't work at Bloomberg, and I said, you know Matthew Boyle, right? And he's like, yes, I read everything that Matthew writes, because there's pretty much no one out there who writes more and knows more about the struggles that companies are facing to get employees back to the office than Matthew Boyle. What's he attacking with this piece?
Zoom, something that all of us came to know well. And, you know, even Zoom needs to evolve. And, you know, it's become almost like a basic utility for so many people that, you know, we've grown to kind of hate it, take it for granted, use it for things beyond meetings. But, you know, even Zoom needs to kind of think about how it's going to evolve. So Matthew, what's in store?
Yeah, it's really interesting, Joel. I mean, they certainly do need to evolve. They had a sort of a rough quarter recently, and earlier this month they had this huge 2-day event, which they called Zoomtopia, I guess for reasons I'm not sure. But it was this huge extravaganza where they basically unveiled a plan to go beyond the 30-minute meeting that we've grown to sort of know and loathe during the pandemic. They know they need to keep people on the app, on the platform longer. So they're introducing a host of new features, including email and chat. And one of them is this thing called Zoom Spots, which is sort of their attempt to create like a virtual water cooler of sorts that people can pop into, have a quick conversation that doesn't merit, you know, a full 30-minute Zoom, and then pop back out. And what they're trying to do here is sort of recreate these connections between colleagues that have been kind of ruptured during the pandemic, you know, as we spend all day, you know, in Zoom calls or on these sort of Slack chats that go nowhere and everywhere. And what's missing is sort of the quick check-in, the just sort of, hi, how are you? Let's talk about, you know, the Giants game. Let's talk a little bit about work. It takes 3 to 5 minutes, then you're done. But what I found, though, is that Zoom is certainly not first to the game here. There are a bunch of really interesting, ambitious startups that have been around for some time. Some of them are new, and some have retrenched, and they're basically creating virtual offices, you know, headquarters in the cloud, so to speak, which creates sort of a digital facsimile of your office so that everybody who's online, you can see them, you can see sort of a little snapshot of their face like you would in Zoom. But unlike Zoom, you can just sort of pop on their little icon, talk to them for a couple of minutes, and then go about your day. So it doesn't have to be this sort of scheduled Zoom call where you have to find time and all that. So what they're trying to do is create a little bit more, you know, recreate some of the connectedness that we've lost during this whole shift to remote work.
Hey, Matt, is this a smart strategy? I mean, what are you hearing from employers? Because I feel like more heads of companies and organizations are saying, get back to the office. We want to see you face to face. So does it make sense for these startups and these companies doing this strategy?
Yeah, I mean, let's remember, everyone is, all the headlines are about what, bosses and Elon Musk saying remote work isn't for me. And but let's remember, the future of work is hybrid. It's not everybody in the office 5 days a week. Those days are really over. So what I learned, though, is talking to these startups is that even if you do have some people in the office, you still can use these tools. Now, they're not going to be as popular or as much utilized, who needs a virtual office if everybody is in the office? But let's think about the workforce today. It's very distributed globally. You might have a web development team in India. You might have some workers in, Central Europe doing work for you. So no matter, even if you do have, let's say, a physical presence in New York or a big city, you're going to have workers elsewhere. And what these tools try to do, at least, is bring them together, so you can see everybody, who's online, who's available to chat, who's tied up. So even as we're in the midst of this big RTO movement, I think very much you're always going to have some workers who are remote, some who are in office, and this is one way, at least, to try to bring them all together.
Okay, so we're familiar with Zoom and the 30-minute meetings, but Matt, give us a sleeper or another service of these startups that you.
A couple of them. The one I talk most to is called Rome. They're founded by a guy called Howard Lerman, who a really interesting entrepreneur. He's had a couple of ventures before this. And, I talked to a bunch of his clients, and they really, seem to be excited. Now, the challenge here is that they're mainly serving small businesses, small and medium-sized businesses. They're not really, attacking Zoom's very entrenched position in what you call the enterprise, meaning big employers. Zoom has almost 210,000 of those customers, and they don't want to give up any of them anytime soon because they're very lucrative. But what Rome and some of the others called Cozy and Timico, those two are out of Europe, actually. They really are doing some interesting stuff here. And one of the people who uses Rome basically said, it's a Zoom killer. Nobody's really using Zoom much anymore. In some cases, they create their own video conferencing software within their platform. So they sort of have their own mini Zooms, within these virtual offices, but you can also use Zoom over them. So what they're trying to do is be as adaptable and as agile as they possibly can. The last thing they want is for a company to say, we tried you out, but it just doesn't work. It doesn't work. We're not able to incorporate this or that bit of software, because remember, there are so many different pieces of software and apps that we use day to day in the course of our work these days, that the last thing these companies want to be seen as is just another piece of technology.
Hey, Matt, just 20 seconds here. Meta platforms, or should we not sleep on meta platforms here?
Well, yeah, you don't want to sleep on them, but when I first heard about this story, I said it was kind of like metaverse for grown-ups, unlike legless avatars and images of dinosaurs running around and doing all sorts of weird stuff within Horizon Worlds. These platforms are just about getting work done. They're very professional. They have a very professional look and feel. Don't expect like Roblox or Minecraft or any of that. It's just very straightforward, and it's just, let's just get some stuff done here.
All right, we're going to leave it on that. Matt, thank you so much. Your stuff on LinkedIn, on Bloomberg, always a must-read. Bloomberg News senior management and workplace reporter Matthew Boyle, along with the editor of Bloomberg Business Week, Joel Weber, joining us back in New York. And, of course, catch his story. It's in the new issue of Bloomberg Business Week out on newsstands, online at Bloomberg.com/businessweek, and on the Bloomberg terminal. This is Bloomberg Radio. Mary Barra coming up.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. About 60 minutes left in the trading session. Romaine Bostic here alongside Scarlett Fu. We're joined right now by Carol Massar and Tim Stenovec out in the wild. We welcome our audiences on Bloomberg Television, radio, as well as on YouTube and Quick Take. And Carol, we had that monster rally yesterday. A lot of optimism coming back into the market. A little bit of tempering today here as a lot of folks parse some of those economic numbers.
Yeah, and to be expected after such an incredible run-up following those comments from Jay Powell. And I will say, if you take a look at some of the economic data, maybe it explains it. It continues to be a mixed batch of data. Again, I'm going to go to the Chinese names. I know I do it a lot, but we are seeing a little bit of a pullback, just like the overall market, down about 2% if we look at those Chinese names that trade in the United States. But guys, keep in mind, this group is up 3 days in a row, an 18% run. So at some point, right, Tim, investors take a little bit of a breather.
Yeah, and I believe best month ever in the month of November. You know, I think mixed bag is a really good way to describe the economic data that we got earlier today. We spoke with Molly Smith, who's economics editor at Bloomberg News, and she said you can really look into this in the sense of, like, this is what the Fed wants to see, which was kind of surprising to me to hear, because we did see the S&P 500 really move lower right when that manufacturing data came in softer than expected. Right. But again, she said, hey, this is what the Fed is trying to do.
Yeah, got it. So a lot of folks, of course, looking at that economic data, you put it all together and you have a market that's basically just kind of hanging out, if you will. Remember, a lot of those technical levels that were tested yesterday, it looks like that is going to be the main test, the main oscillation, the main push and pull here. The S&P down, basically, or actually, excuse me, higher by fractionally, less than 0.1%. Similar story for all the other major indices. If you're looking for any leadership, both to the upside or the downside, you're going to have to keep looking.
You talk about technical levels. 200-day moving average is where the S&P 500 closed at yesterday. It closed above that level, so we're just kind of bouncing around that level right now. And in terms of industry performance, completely mixed. Communication services and infotech leading the way. Netflix is doing very well. Meta's doing well. Tech shares are also still continuing to rally after yesterday's big gains. On the downside, financials and real estate investment trusts, interest rate sensitive sectors are doing less well, off by 0.6% and 0.5%.
Yeah, so some of the individual movers, Salesforce shares moving lower here on the back of their earnings. I also want to bring your attention, though, to what's been going on with Blackstone. The shares down about 7% right now. This on the back of that story that the company is actually limiting redemption requests in one of its main real estate ETFs, a real estate ETF that primarily focuses on commercial real estate. That also comes on the same day that we're learning that Wells Fargo is actually reducing its workforce in its mortgage business and primarily residential mortgages. So a lot of cracks right now in the real estate market to keep an eye on. Blackstone down 7%. Wells Fargo, guys, down about 2%. And we go back, of course, to that economic data that we had a little bit earlier this morning. A lot of folks were focused, of course, on those PCE numbers. They did soften, and that is what the Fed wants to see. But we also got a contraction in our U.S. manufacturing PMIs, and this was significant here. When you take a look at both the PMIs and the ISM data here in the U.S. as well as abroad, you now pretty much have full contraction across the board globally in the manufacturing sector. And that really right now, I think, is what the market, Carol, might be reacting to. The idea that the inflation fight may potentially be winding up, but ahead of us, we now have to deal with weakening economic conditions.
Well, all I'm going to say, Romaine, is bulls don't despair, because Mike Wilson over at Morgan Stanley, the chief U.S. strategist, he says in terms of the equity rally, there's more room to run. Check it out.
We have more confidence that this rally will continue into December. We think rates will go lower. We think, Powell's commentary is right in line with what we've been saying, which is that they're going to pause probably in January. The market's getting in front of that, and this is a classic, kind of Fed pause stock market rally.
And that, of course, is Mike Wilson, the chief U.S. strategist over at Morgan Stanley, ranked #1 by Institutional Investor, and he correctly called the slump earlier this year in stocks. So, we really kind of care, Tim, what he has to say about the outlook.
Wait, when he says rates are going to move lower, does he mean the pace of interest rate hikes is going to slow, or does he mean that the Fed is actually going to cut rates? Because we heard the opposite yesterday from Jay Powell. I mean, don't get optimistic about the Fed cutting rates anytime soon.
I think he's also referring, though, to some of the secondary market here and that reaction there. And in fact, it's something that we've seen today with that drop that we've seen, Carol, here in U.S. Treasuries, particularly on the short end of the curve, Carol.
All right, Romaine, thank you so much. And this is a great backdrop for our guest here, right here on Bloomberg Business Week, on radio, on TV, on YouTube, and Quick Take. We are welcoming the chairman and CEO of General Motors. We're talking about Mary Barra, who is a Stanford Graduate School of Business alum, class of 1990. Mary, first of all, so good to have you here. We want to talk about your time here at Stanford. It's raining. I think you probably had a lot more sun when you were here, but so grateful to have you here. We have to ask you, though, first about the economic outlook. When you look at what's to come, do you think about recession? How does it feel to you?
Well, I'm not an economist, so I can't really call a recession, but I can tell you what I'm seeing in the business right now. And at General Motors, I think on the strength of our products, we're still seeing very strong demand and pricing. It's moderated a little, but still well ahead of levels, that were pre-COVID and pre the semiconductor shortage. So it's something we're continuing to watch on a daily basis. But for the auto industry, we're seeing a little bit from a used car pricing, but still very strong demand.
How does that change your outlook at all for 2023 and what you're expecting next year? Give us an idea of indicators that you're watching.
Sure. Well, one of the things is we are planning for, we decided to put our plan around a more conservative market, around 15 million SAAR, which is the seasonal adjusted sales rate. And because we understand that, if we set everything up, if there's more opportunity, we'll be able to seize the opportunity. But we're taking the approach that we're going to be very mindful of cost as we go into next year. We have a strong product portfolio with new mid-sized trucks coming off of, new trucks that we've just launched this year. So we're confident in our product portfolio, but we're going to be conservative with costs.
Mary, you guys just gave us an update just a short time ago, and you talked about your EV, expectations. One thing we wanted to ask you, some of the things that General Motors has talked about, those EV incentives, thanks to the Inflation Reduction Act, it has said that you guys will do EVs, will reach parity with conventional cars, will help profits reach parity between EVs and conventional cars. Does that mean that General Motors thinks it will sell 1 million EVs in 2025 without those incentives? I wonder if you could give us some clarification and color on that.
Well, we made that statement and that set that goal for ourselves that we'll have the capacity to be able to sell 1 million units in North America and, frankly, in China by 2025. And we think with the strong product portfolio we're going to have at different price points, from the Cadillac Lyriq to the Hummer, the Chevy Silverado, the GMC Sierra, down to a Chevy Equinox and a Chevy Blazer, we're going to have the products across the market that are going to allow us to achieve that metric. So we think we've got the right plan. This was all in place before the incentive package came as a part of IRA. But we think that will help, and it's doing what it was supposed to. We think it was intended to do, was to drive EV adoption, and we've invested a lot in the United States creating jobs, which I think is going to create a stronger economy. So I think it's going to accomplish the objectives, and it happened to be very aligned with the plan we were already executing.
Do those incentives though help margins? Like, it's not a bad thing to have, right?
Well, no, because if you think about it, from an electric vehicle perspective, the battery is the most expensive piece, and where everyone is working to improve battery technology. I think General Motors is in a leading position or among the leaders from a battery cost perspective. Our plant in Ohio is now producing cells, so that's a big advantage, and we have another plant coming on next year and the year after. So I think that's going to be important, but to really get all companies and consumers to move forward to EVs, I think this is very important. So yes, we think that it will be helpful and allow us to continue to invest in the United States.
I do want to talk a little bit more about that battery plant in Ohio, the Ultium battery plant in Lordstown, Ohio. Next week is set to vote on whether or not to join the union, workers there, that is. This is a big deal. It's the first battery plant to have a vote in North America. Do you think the EV business will include the union, and is it good for America to have a union involved in this?
Well, we're very supportive of the plant being unionized. We have a very productive relationship with our labor partners around the globe. We work together on safety, which I think is fundamental, on quality, And so, obviously the employees are going to be voting, but we're very supportive.
Mary, one thing, and it looks like maybe this issue is being dealt with, because, it's funny, we talked with John Levin, the dean of Stanford Graduate School of Business, about just how they get students ready for just so many different things that's going to potentially come at them as leaders. And I was just thinking about the rail strike, like leading up to this interview with you. It looks like from Chuck Schumer that maybe we can put this to rest. But have you guys been strategizing around that and at the impact it could have on GM if indeed it went down?
Oh, absolutely. We've been, even several weeks ago when the first deadline came up, we're watching it very closely. We're encouraging the parties to find an agreement. It will have an impact. There's, when you look at how parts and product are moved across the country, it will have a significant impact. But we've done the planning that we can, and we understand, and also are having the right communication with the rail companies.
All right, we appreciate you weighing in on that. Hey, one thing we wanted to ask you too, man, like the news for General Motors just comes fast and furious. There was a report yesterday, Wall Street Journal, TechCrunch, about these ride-sharing robo-taxis with no steering wheels. I don't know, what can you tell us about this? And this is coming through the GM Cruise division. What can you tell us about this? Is this something that you guys are working on and really pushing ahead on?
Absolutely. We'll be ready to launch the Origin next year, and it is a vehicle that's purpose built for rideshare. Cruise has the technology. We're the only company that is operating and actually charging for rides in San Francisco. By the end of the year, we'll have vehicles operating in Phoenix as well as Austin. And so we think, a lot of people think this technology is 5 or 10 years away. It's here now, and couldn't be more proud of the Cruise team. And I think when we have the Origin, and people are going to see that it really takes rideshare up a notch with the comfort, the convenience that you have with autonomous vehicle rideshare. So couldn't be more supportive, and I'm very excited about this technology.
Okay, so robo-taxis coming soon. Maybe we'll take a ride in them next time we're here at Stanford. Hey, Mary, you're on the board of Walt Disney, so I got to ask about the recent shakeup there. When did the discussions start to make a change and bring back Bob Iger?
Well, I'm really not here to talk about Disney, and I'm not going to talk about the specific timing. That's confidential from a board perspective. But what I will say is, we are incredibly confident. I personally am confident in Bob's ability to set the strategic direction for renewed growth, just as he has done in the past. This is a period of enormous change, and Bob understands that. And he's really uniquely suited to navigate the challenges facing Disney and the broader industry. And he'll focus and take the right steps as it relates to efficiencies and a cost-effective structure. But I think, the initial message that he has is so important, that creativity is the heart and soul of the company. So the board will work closely with him to identify and have the right succession process in this 2 years. But I think right now, if you look at what he accomplished in 15 years, he's the right leader. His legacy on storytelling and what he accomplished with the company is really undeniable. So I think he's the right person for the job.
Mary, we said a lot of things coming at you fast and furiously. I think about Twitter and GM and advertising. What are your expectations about Twitter going forward? Is it just kind of a wait-and-see approach to see whether or not you want to have advertising back on the platform? How do you feel about that?
Yeah, we just want to better understand, and make sure that there's the right monitoring of content. Our brands are very important, and so we're continuing to work with the Twitter team and understand where they're going, and we'll continue to monitor that.
I have to say, one of the things in prepping for this is you gave a speech, I think it was back in 2016, to graduates, and you talked about how when getting an MBA, everybody thought about Gordon Gekko of the Wall Street movie. I think it has definitely evolved when you think about all the different people who get MBAs and where they go. What is, though, the smart conversation about women specifically in senior roles? You did it. But it's interesting, even though there's parity among men and women maybe at business schools, it's not necessarily in the C-suite. And I'm curious what your thoughts are. What's the smart conversation about getting more women in senior roles?
Well, I think, for me personally, my time at Stanford was transformational. I always say, in some cases, I didn't know what I didn't know, and it, taught me so much about business, being the fact that I had a engineering degree, and that's what the degree I pursued before I went there. So I think, continuing to attract women into business school is very, very important. But then, like Stanford, they have specific, initiatives to work to make sure women are prepared for getting to the C-suite and have a network and support to do that. So I think we just got to keep working it. I think a lot of it rests on companies to have the right pipeline. It's not, it's not something you do at the last minute. It's what you do, the minute someone joins the company, and having a strong pipeline through each of the different areas of the company. And that's what we try to do at General Motors. But I think the learning that an MBA provides definitely allows, both everyone who attends the opportunity to be better prepared to succeed.
Mary, 20 seconds, one trait that you got from being at Stanford that you take with you today?
Oh my gosh, there are so many things that I learned at Stanford. But I think one of the key things is, and what is, I think, so special about the Stanford Graduate School of Business is their focus on leadership. Because leadership, no matter what challenge you face, engaging people, being able to set the strategic direction, it all centers on having strong leadership. And that's a focus, and I think a big distinguisher of what the Stanford Graduate School of Business has accomplished.
Well, many would argue that you have done that at General Motors in terms of putting it on a sustainable path and sustainability path, if you will, in terms of the product. Mary Barra, thank you so much. We so appreciate it. The Chairman and CEO of General Motors joining us on Bloomberg Business Week on radio, TV, YouTube, and Quick Tech. Mary, be well. Thank you. Stanford class, Graduate School of Business, 1990. Thank you, Mary. All right, and just a reminder, everybody, we're going to be back with our TV colleagues. We're going to count you down to the closing bell, Beyond the Bell. That's coming up at 4 p.m. Wall Street time. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters. I'm Charlie Pellet. We have got just about 43 minutes to go ahead of the closing bell. U.S. stocks, they are trading mixed. S&P back in the red right now, lower by 3 points, down 0.1%. This update is brought to you by SEI. Imagine your asset management firm's operational infrastructure as a competitive advantage. Let SEI show you how at SEIC.com/IMS. The Dow down 193 now. That is a drop of 0.6%. NASDAQ higher, holding on to gains, up 21 points, up now by about 0.2%. And again, to put all of that in context, the S&P is down by about 0.1%. General Motors shares up 0.2%. GM's Mary Barra telling us moments ago she sees 15 million U.S. vehicle sales next year. We've got the 10-year yielding 3.53% ahead of the jobs report tomorrow. 2-year right now, 4.25%. Spot gold up 1.9%, 18.01 the ounce, while West Texas Intermediate crude oil up now by 1.1%, 81.41 a barrel. So again, recapping here, we're looking at a mixed day on Wall Street. The Dow, the S&P, they're both lower. NASDAQ higher. S&P down now by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week live from the Stanford Graduate School of Business. More interviews to come in just a moment. In the meantime, we are talking a lot about the FTX meltdown and SBF. We're talking about Sam Bankman-Fried, who has been talking to various news organizations, including the New York Times, and he caught up with the DealBook Summit yesterday, and here's what he had to say.
Whatever happened, whenever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators of the world to do right by them, to make sure the right things happened at the company. And clearly, I didn't do a good job of that. I was shocked by what happened this month.
And of course, that was Sam Bankman-Fried speaking at the CNBC, to CNBC at the Dale Book Summit on Wednesday. And again, Andrew Ross Sorkin was the one who was doing the questioning. It's really, I highly recommend you go back and listen to it because it was a lot of questions, a lot that he had to say. Some say not a lot of answers, though.
The media tour, though, continues. Sitting down with George Stephanopoulos,
Right.
That piece airing earlier today on Good Morning America. Here to help us break it all down and, I don't know, maybe give me a good understanding of why Sam Bankman-Fried continues to talk and give these answers to journalists in the wake of everything that he's being accused of is Hannah Miller. She's a Bloomberg News digital currencies and venture capital reporter. She joins us now. Hannah, good to have you with us. The big question, what did we learn new in the last 24 hours, given these two extensive interviews that Sam Bankman-Fried gave?
Yeah, thanks for having me. So, yeah, Bankman-Fried is on an apology tour, basically. You know, he's going around saying over and over again that he screwed up, that he made mistakes as the CEO of FTX, and that he should have focused more on compliance and protecting customers. So, yeah, he is giving this impression of being remorseful, but frankly, he keeps misdirecting away from real questions, which is, you know, how did this $8 billion shortfall happen? Where are customers' funds? Were they misused? He is, you know, kind of setting up this defense here that, you know, he's playing dumb and that he wasn't in the know on everything happening at his company.
Is it a defense, or is it that maybe he really didn't have a grasp on what was going on between FTX and Alameda? Although many people were saying, wait a minute, he was living with people. They were all in one apartment.
And at one point yesterday, he said it took us so long to actually get bank accounts for one of the companies. I mean, it was just shocking to hear how unprepared they were to actually be a business, I guess many could say.
It is shocking, yeah, and he emphasized over and over again that he really didn't know what was going on at Alameda, you know, that he didn't have really the proper oversight, that the two companies were entwined way more closely than he originally thought. He has emphasized over and over again prior to the collapse of FTX that FTX and Alameda were entirely separate entities. When we spoke to him in September, he said over and over again that they were separate. However, there were key areas where we can see that they were interconnected. Those bank accounts where customers who wanted to deposit funds on FTX had to use bank accounts with Alameda being an example. And yes, he did live with Alameda leadership in the Bahamas. He was definitely had, you know, these close relationships with them. He also did have a role in putting together deals that Alameda made, including the bailout to Voyager Digital over the summer. So, you know, I don't know. I think there's some contradictions here with the picture he's trying to paint.
Hannah, I'm just shocked each and every time he tweets, every time he does an interview. What do we know about what his lawyers are telling him or who's advising him, saying that, like, yeah, you should do this?
Sorkin asked him about this, right? Even doing the event with Andrew Sorkin.
Yeah, I think, you know, he's kind of given an indication that his lawyers haven't been particularly happy with him at times. And he talked about, you know, this deleted tweet that he had when this crisis sort of kicked off. So, you know, it's unclear what exactly the legal advice he's getting here. But, yeah, it does seem like he's laying a foundation for this being, you know, a matter of negligence versus him actively, you know, doing something wrong. He said over and over again, you know, I didn't mean to commit fraud on anyone. So yeah, there are still a lot of details here, and you know, obviously there's still an ongoing investigations into whether there was misuse of customer funds.
Hannah, I think, you know, I guess we're all just kind of waiting to find out more. And we always do put the caveat out there that there are, you know, investigators looking into it, regulators looking into this, you know, to find out if indeed there was fraud committed. So we want to be fair about that. But having said that, in terms of the conversations that we've heard from SBF, have we moved the needle any more forward in terms of understanding exactly what happened?
I still think there are more questions than answers here. You know, he's given these convoluted explanations about how this $8 billion hole appeared, and has sort of blamed it on an accounting error. But I think what's really going to come down to what John J. Ray, finds as he's now running the company as acting CEO and, looking into what really led up to this catastrophic failure.
All right, we have about 40 seconds left, Hannah. What are the ultimate consequences that Sam Bankman-Fried could face?
Yeah, I mean, I think it's, possible with these investigations that, criminal wrongdoing could come out, but that is down the line. This idea of whether he did defraud customers, did defraud investors, that's still up in the air. And, even though he's reiterating over and over again that, it was mistakes, that it was, his fault as CEO, I still think it's unclear about what exactly his future holds.
All right, Hannah Miller, thank you so much. One of the many members of the Bloomberg News team really keeping us up to date on FTX and Sam Bankman-Fried and this ongoing understanding of another big leg down for the crypto world. Hannah, thank you so much. You're listening and watching Bloomberg Business Week. More to come from the Stanford Graduate School of Business, including the CEO of Nextdoor.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, you are listening and watching Bloomberg Business Week on this Thursday. Carol Massar along with Tim Stenbeck. We are, yes, in Silicon Valley. We are at the Stanford Graduate School of Business
raining.
Campus. It is raining.
And it's cold.
It's a little chilly. But we've had some great, fun, warm conversations with alumni, faculty, the dean, and we're going to have another alum coming up in just a moment.
Yeah, Sarah Fryer, the CEO of Nextdoor, is going to be joining us. She's just got an incredible background. Yeah. She was at Square before it was called Block, took that company from a couple hundred people to a few thousand in public. We're going to dive into quite a bit of her journey in just a minute. First up, though, Charlie Pellet, we got less than a half hour to go.
Indeed. Thank you very much, Tim, and a very different tone to the market with just about 28 minutes, as you say, on this Thursday, ahead of a jobs report tomorrow, but also after Jay Powell's remarks yesterday. Stocks seeing a lot of instability right near a key technical level. Traders awaiting the all-important jobs report for clues on the Fed's next steps. Big fights unfolding right around the S&P 500's 200-day moving average, an indicator seen by some analysts as portending the continuation of a move when breached. We've got the S&P right now down by half a point, little change. The Dow lower by 182 points, down 0.5%. NASDAQ up 26, higher by about 0.2%. 10-year yield 3.52%. The 2 years yielding 4.24%. Spot gold up 1.9%, 18.02 the ounce, and West Texas Intermediate crude up 1.1%, 81.40 for a barrel of WTI. Lots of speculation and lots of debate about the timing and depth of a U.S. recession, a topic that General Motors CEO Mary Barra weighed in on moments ago right here on Bloomberg Business Week.
Well, I'm not an economist, so I can't really call a recession, but I can tell you what I'm seeing in the business right now. And at General Motors, I think on the strength of our products, we're still seeing very strong demand and pricing. It's moderated a little, but still well ahead of levels, that were pre-COVID and pre the semiconductor shortage.
And she did tell us that GM sees strong EV demand with or without federal incentives. General Motors shares, right now, they are up by 0.1%. Sources tell Bloomberg Party City Holdco is renewing talks with creditors over liquidity needs with help from long-standing advisors. Party City down by 7%. Dollar General fell after cutting its profit outlook. Dollar General down now by 8%. Costco Wholesale down the most since May as its long pandemic-era sales boom shows signs of slowing down. Costco down now by 6.5%. Recapping S&P lower, little change, down by half a point. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week on this Thursday. Carol Massar along Tim Stenbeck. We are, of course, at the Stanford Graduate School of Business. We've got more interviews to come, and we're going to talk to current students on campus. We're also going to talk to professors. They do something called co-teaching, bringing in different professors from different backgrounds and different studies, if you will. And so it really kind of enriches the experience here.
We've had some great conversations today. Those conversations continue. We're very pleased right now to bring in Sarah Fryer. She's the CEO of the neighborhood social network Nextdoor. She joins us right now from our San Francisco bureau. Sarah, good to have you with us. You were a Stanford class of 2000 here at the Graduate School of Business, and we're going to get your time at Stanford in just a minute. But first, I want to talk about the business and get an update from you on how things are going at Nextdoor, because this has been a tough time for ad-based social networks. I mean, Meta down more than 65%, Snap down close to 80%. How should investors be thinking right now about the ad-based model for social platforms?
Yeah, absolutely. Carol and Tim, first of all, it's great to be with you. Thanks for having me, and always great to talk about Stanford GSB. On Nextdoor, right now, we're there to meet the moment, so we can be there for neighbors in their time of need. They might be finding a side hustle. Sometimes it's selling something on our for sale and free platform, and clearly we're there for businesses. So the small businesses are actually coming to Nextdoor because that's where they're finding new customers or maybe finding ways to upsell to those current customers. We have about 3.9 million on the site today. And then, of course, for larger advertisers, they are absolutely looking for performance, probably segueing a little away from brand type marketing into much more performance type marketing. It's a place where Nextdoor can really sing for them. And so that's been our focus. How can we help those advertisers do what they need to do? Get more sales, get more customers.
And Sarah, we want to get into certainly your experience here at Stanford, but a little bit more on the business, if you will, because you guys really play into such a space that we talked about so much at Bloomberg in terms of the social space, the advertising space. I mean, is advertiser interest slowing? Are you seeing that? And if so, can you quantify it for us? Give us an idea of what you're seeing.
I mean, for sure, when you look at the whole space, you already mentioned many of the competitors in the space. Advertising is always a place that people will go to first when they're worried about a recession. And clearly the economic indicators are pointing that way. It's a quick way sometimes to just pull back on more variable spending. That said, in a downturn, you can't afford to completely turn it off. You still need to be driving revenue, and advertisers are mindful of that. It also tends to be, as I tell my team all the time, the first thing that we'll see a recovery in. So whether it's a soft landing in 2023 or maybe a harder landing, and we're out in 2024, ad spending is definitely the one to watch, I think, as a very early barometer on the overall environment. When I talk to advertisers right now, they are focusing on, again, what they can control. So what are the parts of their businesses that are still growing? I was with a bank just yesterday. Clearly, they're not spending as much on mortgage-based advertising, but they're definitely spending in areas like consumer banking and in small business banking because they know that small businesses are going to need them if times are getting tougher. Just one example.
Sarah, what's the mix between local businesses, advertising from like local businesses versus global companies? Is there a difference in terms of the level of activity that you're seeing or level of slowdown that you're seeing? And what's more important to your business?
For us, it's all about local. Nextdoor is the neighborhood, and that's our unique competitive advantage, being able to bring local at scale. The people on Nextdoor today, we're in 1 in 3 households in the United States, but the people tend to be the household decision maker, right? The person who says, what's going in the fridge? What sort of car am I going to buy? Maybe I'm going to take a vacation, although with the recession coming, maybe I'm not, and I want to do something more locally. So for us, local is certainly what matters. But don't think about it as only, say, smaller companies, because there clearly are global, as you point out, and national brands that want to act local. Walmart is a good example. McDonald's is a great example. Even tech companies like a DoorDash, right? They're all thinking about local and wanting to show up for individual communities, but they need to be able to do that at scale.
And for our viewers and listeners not familiar, you're on the Walmart board, so you definitely have some unique insight into how that company is thinking. Hey, Sarah, I'm curious because, you know, the changes that Apple made to its operating system in the last couple of years, specifically around privacy and IDFA, the challenges that that's posed to Facebook and Snap, that's been really well documented. One thing we've also heard, though, that it's been a challenge for small and medium-sized businesses to actually reach their audience as a result of those privacy changes. Just in the last minute that we have with you, 30 seconds, do you, is that Nextdoor's gain?
It should certainly help us because you're right. I think small businesses were used to a certain level of performance, and we've definitely heard that as we've gone out and done more of our insights-driven research, that all of a sudden they're not seeing that on platforms that they were used to spending a lot on. So again, we come back to what can we do for you as a small local business? Nextdoor gives you a free page, a free presence on the site, a way to talk to the customers that can literally walk into your corner shop, walk into your hair salon, walk into your fitness studio. The second thing we do is very trusted. You know it's real neighbors, real people at a real address. And then finally, there's that community aspect. The thing I always love about local businesses is they're not just there to make a dime. They're also there often to do good in their community. We saw this just through the Thanksgiving period with a lot of businesses giving back, particularly to folks that may not have what they need to put food on the table. We're right now actually offering a small business grant with the NAACP to really get to minority businesses as well. So just some examples of how Nextdoor can help local businesses at a local level.
Hey, Sarah, before we go, we do have to ask you about your time at Stanford. You were here at the height of the dot-com bubble. Do you see any comparisons or similarities between that time and maybe, I don't know, is it the crypto bust? I'm not quite sure.
Or just the frothy market that we saw kind of lose some froth over the last year.
Yeah.
Yeah, it's interesting. I was actually just at the business school a few weeks back teaching a class about Square's IPO. You mentioned Square. And it's a class I've taught now for a couple of years. A year ago, we were in full frost mode. And as we talked about valuation and multiples, it felt like there was almost no ceiling to it. This year's class was a much more somber. But I think our message to them, I teach it with another ex-GSBer who's on the buy side, is it's a great time to pivot to fundamentals. Some of the greatest businesses I've seen have been created in the downturn, because you've got to be great if you're going to make it through, say, a public market issuance when a market is low. So it can actually be a time of great opportunity. That's how I'm thinking about my business right now. It's certainly what I learned when I came out of Stanford Business School into a world that was going through its own mega crisis. And of course, I was at a financial institution during the financial crisis. So there's lived experiences that tell us these are cycles. It will get better, but we have to be really mindful and realistic about what we can do for our business today.
Well, a perfect point to wrap up on. Sarah, thank you so much for your time. We know there's a lot going on, but we really appreciate it. Sarah Fryer, of course, she's the CEO of Nextdoor, class of 2000 at the Stanford Graduate School of Business.
Let's get to world and national news. To Washington, D.C. we go, and Nancy Lyons. Hey there, Nance.
Thanks, Tim. Plenty of pomp and circumstance today as President Biden meets with French President Emmanuel Macron. Macron, ahead of today's meeting, had expressed concerns about America's recently passed Inflation Reduction Act, offering green energy subsidies. He feels that will siphon investment away from Europe. Today, he sounded satisfied that the U.S. is willing to talk about it.
We agreed to resynchronize our approaches, our agendas, in order to invest in critical emerging industries, semiconductors, batteries, hydrogen, everything that is absolutely decisive, because, as a matter of fact, we share the same vision.
Again, Macron speaking through an interpreter. With a December 9th rail strike deadline quickly approaching, Senator Chuck Schumer says he's working to pass the two measures approved yesterday by the House. One implements a tentative deal reached earlier this fall. Another would provide 7 days of paid sick leave.
I support paid sick leave. My Democratic colleagues support paid sick leave, and we want to see it included in the package. We hope some of our Republican colleagues will join us.
Schumer says forcing workers to choose between their health and their livelihood is unacceptable. Republicans are not expected to support expanding sick leave benefits. Today, the Supreme Court says it will hear arguments on President Biden's student debt forgiveness program in February, but says it will block its rollout until then. At the World Cup underway right now, Japan leads Spain 2-1, and Germany just scored and is now ahead of Costa Rica 3-2. Earlier today, Croatia and Belgium played to a draw. Morocco defeated Canada. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, and Nancy Lyons. Tim Stenevec and Carol Nassar were live at Stanford's Graduate School of Business. Let's go now to Charlie Pellet for an update on what's happened in the markets. Hey, Charlie.
Hi, thank you very much, Tim Stenevec. We've got 15 minutes to go ahead of the closing bell. Going to be very interesting to see whether the S&P can move higher. Right now, we're looking at a gain of 5 points, up by about 0.1%. The Dow in the red, going to be a losing day there, down by 144 points right now, down 0.4%. NASDAQ higher by 41 points now, up by about 0.4%. Lots of instability for the S&P 500 index, right near a key technical level as traders await the all-important jobs report tomorrow morning. Complete coverage as you have come to expect over the years, and analysis right here on Bloomberg Radio, 8:30 a.m., of course, when that number drops. 10-year yield right now, 3.52%. The 2-year, 4.23%. Spot gold up 2% now, $18.03 the ounce. West Texas Intermediate crude up 1.1%, $81.42 a barrel. So again, recapping, stocks mixed. S&P looking at a 6-point gain, up now by 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, let's get to it. Just about 10 minutes left in today's, no, actually about 15 minutes left in today's trading session.
We get a little extra time with Abigail today.
We do.
Yeah.
Which is actually really wonderful. We want to bring in Abigail Doolittle. She covers the markets for us here at Bloomberg News on radio, on TV, and taking a look at the trade, which is a very different trade, Abigail, from what we had yesterday, which I was calling kind of the Jay Powell rally, certainly when it comes to stocks.
Yeah, I would agree with you. That was the Jay Powell rally, and it was a bit of a head scratcher to me, Carol, from the standpoint that I'm in the camp that he didn't really say anything new, and that what's being said isn't dovish. But somebody earlier today, I heard at least one person point out that perhaps what it was that nothing new hawkish was introduced, and that was enough for the rally. Something else that somebody helped me to see, actually, Doug Krisner from the Asia programming, the idea that the fact that the pace is moderating, perhaps that slower pace puts the Fed and Powell more in charge of the quote-unquote car, and that maybe even though they're saying that the terminal rate right now is going to be higher, maybe as things go on because they're more under control, it won't be. Now, I like the way that sounds, and it makes sense to me. I don't necessarily agree with it, though. I think that right now this Fed is pretty hawkish. They have an inflation story to keep tamping down, and in terms of stocks, if stocks were to really go wildfire and take out the August high and then go sharply higher, then you'd have to contend with the wealth effect, because stocks going higher, that would go back out into the real economy as folks out there would potentially feel wealthier as their portfolios moved higher, sold back up.
That's so interesting, Abigail. Essentially what you're saying is that can be inflationary on its own.
I think that it certainly would be. I mean, I think that's a big piece of the inflation that we've seen over the last 2 years, because you had all that liquidity go into stocks in the pandemic, and then it went into housing. And, you know, I don't know, in areas, I'm familiar with upstate New York, there's a lot of all cash bids on houses up there. You know, 10, 20 years ago, that didn't happen. I'm thinking to myself, where is that happening now? Well, some of it could be money from New York coming up, but I think it's also a lot of money coming out of the stock market. People made a lot of money. So if stocks were to start climbing like that again, you could see, again, that wealth effect go from the stock market into the real economy and go against the inflation-busting moves that are working, by the way. Those ISM numbers that came out today, below 50. Some of the pieces of it, construction, not great. And the PCE, good news. It's, you know, of course, that's the Fed's primary way of looking at inflation. It came in less than expected. So it seems as though the Fed is succeeding to some degree in cooling the economy, and the housing market is certainly suggesting that too. But they want to keep it that way, even as they sacrifice the economy. Is my understanding.
Hey, Abigail. Early this morning, in the hotel, do what I do when I travel. I turn on Bloomberg TV, and there you were, and you were talking technicals about essentially what bulls and bears are battling with when it comes to the 200-day moving average right now. Take us into the technical analysis, because we've spoken about the macroeconomy, the economic data, but when you're looking at the charts, what are you seeing?
Well, let me pull up the S&P 500 right now and take a look at it. So what we're looking at for all of our listeners is the steep downtrend this year, the bear market at one point down well more than 20%. Right now, down less than, I think, 15%, somewhere between 10 to 15% from that peak. And it's right above what's been resistance this year, the 200-day moving average. The question is, can it truly bust through and take on the August high, or is it going to go right back down into the range? Now, the fact that we've actually made it to the 200-day moving average isn't so surprising to me, because we've done that several times this year. Resistance has a way of drawing markets up. Buyers and sellers are pretty predictable in what they do. Another way to look at it, though, that may be more constructive or more helpful is the VIX, that volatility index. It doesn't measure fear. It measures volatility and uncertainty, and that can be to the upside and the downside. In any case, it's holding 20 of trend line there like a glove. If it continues to hold it, there's a good chance that VIX is going to go back up into the top of the range toward, let's call it 35 or above. If it breaks below it, then we're going to be off to the races. We're going to really see stocks go higher. Right now, it's holding in a pretty impressive way. So I'm really watching that VIX almost more than I'm watching the 200-day moving average at this point.
That's interesting, because I know that I always feel like when it comes to technicians or market watchers, they have mixed feelings about the volatility index. And you're right, though. It just speaks to volatility and uncertainty in the market, and that's a great way of reminding us. I will say, That has nothing to do with the fear in the market.
Or the space heaters.
Or maybe that's the party.
Keeping us warm. Everything is fine.
It's just being out in the wonderful open. So cars go by, trucks go by.
Fire trucks.
The alarms, we hear them in New York. You know, right, alarms, right?
Good.
On the East Coast, on the West Coast. I do think about, though, Abigail, what things you're watching for. You know, everybody's talking about the Santa Claus rally. It certainly felt like we were going to get it after yesterday's trade. What is it that you are just going to be watching in terms of market trends then? You talk about this 200-day average, moving average. What is it that you're going to be watching over the next couple of weeks as we get ready to wrap up, hard to believe, 2022?
I know, it's amazing, and it's going to be here before you know it. You know, so right now I'm actually more focused on fundamentals. I'm going to be really curious to see what happens with that jobs report tomorrow. Right now it's 200,000 jobs added. That's the expectation, down from the previous month of October of 261. It's interesting because we've had month after month of sort of Goldilocks jobs reports where there's a couple 100,000 jobs added to the economy. It's a good thing, but it's not so hot that the Fed has to go nuts. Now, if that number comes in sharply higher, will we hear a different message out of the Fed in a couple of weeks? Hard to say. The ADP report came in a little bit light, so that'll be something that I'm watching. And then, of course, also the ISM services that will be coming out. And then, you know, a little bit further out, the CPI. And then, of course, the Fed itself. I mean, it's interesting. This is the first, and I think we were talking about this like a week or two ago, this is the first Fed that they have the potential at meetings to say something that really is sort of surprising. And you know, for years, everybody would, you know, listen to the meetings, you know, these different testimony in front of Congress and expect something new to be said. Almost never was anything new said. I feel as though this time with Fed Chair Jay Powell, I mean, we have to remember he is an attorney by training, and I think that gives him special skills in terms of communication, saying not too much, just the right amount, and having a way of giving the right tone. So even the right tone seems to be a shock, but at other times he's actually said things that are new to the markets. So who knows? What will they say at this upcoming Fed meeting? It seems all but certain that it will be a 50 basis point hike as opposed to 75. But will any of that economic data have changed enough to sway them to somehow change the tone and the communication for next year?
If you are just now joining us, we're talking to Abigail Doolittle of Bloomberg News, our Drive to the Close guest this afternoon, and we are live at Stanford's Graduate School of Business. So you might hear some rain in the background.
Some sirens.
Voices might sound a little different, but we are dealing with the elements here. Hey, Abigail, I want to go back to what you said earlier about what Fed Chair Jay Powell said yesterday. You said that it wasn't actually as dovish as a lot of people interpreted. Which part specifically are you pointing to? I mean, what about what he said yesterday was hawkish? Because my big takeaway is, you know, this sort of downshift, 50 basis points. We're not going to see 75 in December, and now all eyes are on what happens in February. So what struck you from that?
So it's not that I think that he said anything that was dovish or hawkish. I just think that he said that what he's already said. He's excellent at floating a message a couple weeks before. Because he basically, I mean, in terms of, I'm actually pulling up my Twitter feed here because I tweeted it at the time. And then right after that, I tweeted out a picture of cake because I said, you know, based on these comments, it seems Powell wants to eat his cake and have it too. And I really think that that's the case because he's saying it's time for moderating the hike pace. That might come as soon as December. Well, we've already heard that. Now he's confirming that. The rate peak likely somewhat higher, though, than the September forecast. So that's actually a little bit new. You could actually make the case maybe that is a little bit hawkish. You know, that terminal rate could be higher. And then that it's going to be a restrictive policy for some time. So I don't think he said anything new, but what I think he said is that they are, you know, we've been, for more than a decade, we've been used to a Fed that's in accommodation mode. We are now having a Fed that is in tightening mode, and I don't think he said anything yesterday that indicates that it's otherwise. So that's what stands out to me, and that's what also stands out to me, that you had investors buying up stocks. Now, it was also the end of the month, so that could have been some window dressing. And then Steve Sosnick over at Interactive Brokers, he said that there was some big end of the year calls, you know, to your point, Carol, on that Santa Claus rally, call buying into this. So, you know, sometimes folks want to rally the algorithms. Maybe they saw moderating pace, and that set their algorithms off. I don't think we have anything too new. I think the thing that we need to remember is 2023 could be pretty difficult. The last time that I remember seeing the number of job layoffs that we have from a variety of industries coming across the tape, 2008, 2000 to 2003, the housing market is basically in a recession, even though it's somehow a quiet recession. I think 2023 could be difficult. I mean, we're going to be lucky if it's a soft recession, a shallow recession, but maybe it's going to be, a little bit more challenging. And I don't think that the Fed is necessarily going to take its foot off the brake pedal, I guess, in terms of hiking. I think that they're pretty determined to make sure that inflation really is scorched out.
All right, we're going to leave it on that note. Abigail, thank you so much. Really comprehensive in terms of understanding today's market environment after kind of a crazy, very bullish day yesterday, and it feels like a very different tone today, and there's still lots to be known about the outlook in terms of the economy. Abigail Doolittle of Bloomberg News covers the markets for us on all our platforms. Just got a few minutes left in today's trading session, and I have to say, I heard Mike McKee, I think, earlier talk about that. You really won't see maybe the Fed start to rate rates until or start to cut rates maybe until like the job market starts to come undone. So
all right,
there's just some different things to
we'll see if we have any signs
on.
of that tomorrow, right?
Exactly. All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio. It is 3:56 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. By the very nature of their jobs, members of Congress have no business trading stocks. They may have access to privileged information, or they may know of pending legislation that could affect an industry's bottom line. Even if their portfolios simply fluctuate along with the market, there's no escaping the appearance of a conflict of interest. Polling on this issue is clear. A majority of voters from both parties support banning congressional stock trading. Bipartisan bills for doing so have been circulating for months. Now, with just weeks left in the current session, members of Congress should take action. At the very least, a requirement to put any investment assets in a blind trust for the duration of their time in office should be a no-brainer. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion. Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Scarlett Fu here, counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast. With Carol Massar and Tim Stenovic, we welcome our audiences across Bloomberg Television and Radio, as well as on YouTube and on Quick Take. Before we talk markets here, guys, I do want to bring you some breaking news here. This on that legislation to avert the U.S. rail strike. The U.S. Senate has passed legislation that would effectively force all of the unions involved in this to accept the terms of that original contract that had been brokered by the Biden administration. This is legislation that passed the House, and the President of the United States has said that he does plan to sign it. We'll keep an eye on that because, of course, we know, Scarlett, there's been a lot of focus here on the potential economic fallout if you did have an actual rail strike that would effectively cripple, at least when it comes to commodities, so much of the movement of goods around here. I don't think the market was really necessarily trading off that today, but there are broader economic concerns that they have, I think more longer term here as you get into 2023. So you might get the relief of saying, oh my gosh, the Fed's done hiking, but then all of a sudden you have maybe a GDP story that's not favorable.
And you have to look forward to 2023 and what the Fed said, which is that our work is not done. We're going to continue to raise rates because it's not as if inflation has come down to the target level that we're looking at, which would be 2%. We're still multiples of that right now.
Well, we're about 30 seconds away from the closing bells. I believe that Carol Massar and Tim Stenovic are going to join us right now before the bells actually, oh, there they are. Here, I think they got caught in the rain. Great to see you guys. They're actually out in Stanford. If you're wondering why, well, maybe Carol will tell you a little bit later, but let's get a check here on the markets as we hear the closing bells here in New York and the clapping. An interesting day here. Take it with a grain of salt, but the price action is this. A Dow Jones Industrial Average lower by about 0.5%. An S&P 500 that looks like it's going to finish the day in the red, but only by roughly about 3 points. So that's down less than 0.1%. The NASDAQ Composite up about 0.1%, Carol, while the Russell 2000 and some of the cyclical names moving lower here. The Russell 2000 down almost 0.3% on the day.
Yeah, almost like investors were exhausted after yesterday's unbelievable rally and outperformance rally. But if I look at the S&P 500, guys, almost an even split in terms of up and down. 256 names in the S&P gaining ground today, 243 lower, 4 and change, Scarlett. So kind of almost an even split there.
And you see that reflected in the industry performers as well. Consumer durables and apparel up by 1.4%, but then after that, the gains kind of peter out here with pharma about a 0.7% gain, and media entertainment, we're looking at Netflix and Meta doing well. On the downside, consumer staples like food down by 2.6%, and financials have been weak all day long. The banks are currently off by 1.6%.
All right, let's get to some of the individual gainers in today's session, Scarlett. So Royal Caribbean on that list, up about 1.7% here at the close. Coming out, it has about 3 different cruise lines. It's Celebrity Cruises posting the line's single largest booking day ever on Black Friday, shattering previous records for Black Friday and Cyber Monday sales. So we saw some outperformance there. I have to just do a shameless plug. Royal Caribbean is going to be the subject of a future Chief Future Officer edition on Bloomberg TV and Bloomberg Radio. I actually caught up with the CEO and CFO. Splunk, I want to mention, look at that, up 18% in today's session. Upbeat forecast, we talked about those numbers yesterday after the close. So we saw that one extending. Also, strategy that it has an agreement with AWS. So that was some news today. And Okta, also something that we broke down in the after hours yesterday. It was up 26%, plays into the cloud space. And this is a group of the tech area that has been under pressure, but nonetheless up 26%. Third quarter beat, and also they company Tim putting out some upbeat forecasts. Again, those numbers after the close yesterday.
Well, quite a different story with another player in the cloud space. We're talking about Salesforce today. Company shares closing with the biggest drop since January 5th, down 8.3%. This after the company gave fourth quarter revenue forecasts that fell short of analyst estimates. The company also saying that co-CEO Brett Taylor will be stepping down. Costco also finished the day down, this time by 6.56%, tumbling the most since May. This is its pandemic-era sales boom showed signs of slowing. And then another retailer showing the decline today of 7.5%. We're talking about Dollar General. It cut its profit outlook on higher supply chain costs and a shift in customer demand to less profitable consumable products, Romain.
All right, and we take a look at the yield space. There was a lot of activity there today, actually leading to a somewhat deeper inversion here with the long end of the curve, seeing most of the buying here on the day, a 13 basis point drop on your 30-year yield, 12 basis points on your 20-year, but then you go to the shorter end of the curve and you're talking about 10 on a 10-year and 7 down on your 2-year here. You put it all together here, and you can see why there is still some concerns here about the inversion and whatever recession signal that might actually be sending.
I want to bring it back to equities for a moment here, because one thing that was pointed out in the note I read today is how the VIX is one source of potential worry going forward, because a VIX at 20, and it did close just below 20 today at 19.9, tends to show that the VIX then goes right back up pretty quickly. It does not stay at that level below 20 for very long. We've seen it all this year, and that's certainly been the case a couple of times back in August and then back in March, April, and at the beginning of the year as well. So we've already read all these analyst notes that predict a wild ride, volatility in the first half of 2023. That's kind of what the VIX is signaling here, too.
You know, it's so funny, Scarlett, that you bring that up. We just did a deep dive with Abigail Doolittle, who, as you know, covers the markets here at Bloomberg. And she was really focusing, she said, more on the volatility index, the VIX versus the moving averages when it comes to something like the S&P 500 breaking out either of a 200-day moving average to the upside or downside. She says, you know, remember, it is a sign of volatility. It is a sign of uncertainty in terms of the markets. And she, too, talked about the possibility of it spiking once again, especially with it at these low levels. So I think it's an important indicator for that that you've actually brought up.
She also said that it's, you know, she thinks that it wouldn't be surprising if the uncertainty continues into 2023 with everything that we've seen with the housing market. And look, a lot of this has to do with what we hear in terms of non-farm payrolls tomorrow, but the job losses, at least anecdotally, and then the challenger numbers that we got earlier today about hits to the tech industry, those are certainly things to keep an eye on as we head into 2023.
Yeah, of course, we get the jobs report tomorrow morning, but then you wonder sort of, you know, even if you start to see some softness in that headline number, there's just still so many other indicators out there, guys, that shows a labor market that is still resilient, that we were speaking a little bit earlier with one of our guests who talked about how fast that can flip, and sort of when you look at some of the historical data of how quickly the labor market can flip, maybe this does end end up being a cliff rather than sort of a long slide, a long trend down.
Especially when all the data so far points to a fairly resilient consumer. The personal income, personal spending numbers, the PCE numbers all indicate that the consumer is doing very well, perhaps cushioned by the savings accumulated and built up during the pandemic.
This is why I know we're just trickling out still some earnings. We broke them down yesterday, but what companies have to say about the outlook? If they are starting to feel pressure once again on their margins, what are the levers that they pull to cut back on costs? And is it labor, or are they nervous about not having the workers when they need them on the other side of this cycle? So this is the tricky part, and I think the more we hear about the outlook from the corporate community, we get a better idea of like kind of where the financial market should go.
I am curious,
We posed the question earlier in our program. Yeah, go ahead, Roman.
Well, just to your margin point, because I mean, so many people have been talking about this sort of impending margin compression here, but we still continue, at least this earnings season, we still continue to see companies expand margins, albeit not quite at those sort of that fat spread that we had seen earlier in the year, but they're still expanding, or holding at least.
Well, and we've been seeing a lot of companies, right, have the ability to raise prices, but you do wonder how much longer that will continue at this point. And I guess this is just something that we hope that when we're talking to various leaders of companies, right, we pull this out of them and kind of get an indication of how much pressure that they are feeling when there's still some uncertainty about the outlook.
Okay, if you're watching us right now, you know that we're not in our Interactive Broker studios. We're on the West Coast. We're live at the Stanford Graduate School of Business.
What are you doing out there? Are you guys just, you're taking your kids there? Are they applying? Is that what's going on?
Yeah, total vacation in the cold and rain. In the cold and rain, that's what we're doing. Well, Stanford is the top school.
We believe when we do a remote, we should go where it's cold, it's rainy, these kinds of things.
It is a
rare day. You were just plugging your interview that you did on a cruise ship. Down in Florida, wasn't it?
I was warm,
okay, so you get all the
plum
assignments, so don't say, oh, woe is me. Have fun in San Francisco, by the way.
Well, I did try to get the dean's take on the economy and what impact that does have on Stanford's business school, because we do know a lot of graduates go end up working in technology. Yeah. He said the heartbeat, the engine of Silicon Valley right now continues to be strong despite the headlines, despite what we're reading. And again, historically, 15 to 20% of graduates from Stanford's Graduate School of Business, they go on and start their own companies. They're the entrepreneurs who are starting these firms.
Does he still see, though, Silicon Valley remaining kind of the heartbeat of technology in this country? Because there's been a lot of shift outside of that, that brain center.
We didn't specifically talk about that shift, but one thing that he did say is that recruiters are still coming to campus, even from those companies that are having hiring slowdowns, even from those companies that are having layoffs. So they're still seeing that activity here.
Next time we come to Stanford, Romaine, Scarlett, you can come. Romaine, you can come only if you promise that you get Tim to wear a bow tie.
A bow tie. Yeah, deal.
I can barely tie a real tie.
I feel like he'll be a little bit out of place on the Stanford campus with a bow tie, but that's easy for you.
Exactly. All right, guys, we got to wrap. Fun to catch up with you. We will be back home soon. All right, that is a wrap for our cross-platform coverage. We do it on radio, we do it on TV, YouTube, and of course on Bloomberg Quick Take. We will see you again, same time, same place tomorrow.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It turned out to be a down day for the S&P, down day for the Dow, and an up day for the NASDAQ Composite Index, building on yesterday's gains. So ahead of the jobs report tomorrow, we've got the S&P at 4,076, down 3 points today, down by about 0.1%. The Dow down 194, down 0.6%. NASDAQ up 14, a gain there of 0.1%. Lots of earnings after the bell today. Marvell Technology reported adjusted EPS for the third quarter that missed the average analyst estimate. After our shares of Marvell, they are down now by about 8%. 10-year yield 3.50%. The 2-year yield 4.23%. Spot gold 18.03 the ounce, up today by 2%. Gold higher by $34.58 the ounce. West Texas Intermediate crude up 1%, 81.35 a barrel. So again, stocks wavered, S&P lower after yesterday's big rally as traders await tomorrow morning's jobs report. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
No, not hearing. Yeah, now I am. Got him.
All right, Charlie. Thank you so much. Charlie Pellet with a Bloomberg Business News Flash. You are listening and watching Bloomberg Business Week on this Thursday. A little chilly out here.
unseasonably cool and wet in this part of the country.
He
but
is such the diplomat.
okay, well, look, I'm a
This
Californian.
team.
You can never complain about rain if you're a Californian. This state is going through a severe drought right
That's
now.
true.
I mean, it has been for as long as I can remember. So any rain is welcome.
Silver
We're okay
lining
with
in
it.
the clouds.
Silver lining.
Even the
that
rain
is
clouds.
true.
All right, right now we have a couple of members of the Stanford Graduate School of Business team. We have Senior Associate Dean Paul Oyer. He oversees the MBA program. He's professor of economics. He's also author of a new book, An Economist Goes to the Game. We'll talk about that in a moment. And Professor Kate Casey, Associate Professor of Political Economy. She worked for the World Bank. She worked for the government of Sierra Leone. Focuses, among other areas, of political accountability so much. But we want to talk to them because I think it has to do with the co-teaching model that often happens at Stanford. So we welcome them. First of all, thank you for having us on your campus. And it's great to kind of talk with the different constituents, if you will, of the Stanford community, including yourselves. Paul, let me ask you, first of all, you do oversee the MBA program. I do. What's top of mind when you think about what you want to make sure that the student body and the student population is getting here at Stanford?
Yeah, I think the students these days have so many demands on their time, and getting them to really take the 2 years that they're here and immerse themselves in the academic and the other things that the program has to offer, and not, and really come here with a goal. I think that's a key to being successful. And then having great professors like Kate and so forth makes it easy for them to focus on academics a lot of the time, but there's just so many things you can do in 2 years at Stanford.
Well, talk about that a little bit, because I remember when I did go to business school a few years ago, and in our introduction, the dean, I remember saying, think about business school having 3 stools. One is academics, one is recruiting, and one is social. So whenever I was studying for a test, I'd always think to myself, am I doing more than 33% of academics right now? Should I be out having beers with my classmates? How do you see that?
So first of all, I would agree that those are the 3 legs of the stool. That doesn't mean they have to be equal legs. I like to remind people we're graduate school at Stanford University, which is the best research university in the world. Some of your listeners may disagree, but we're right up there no matter what.
Among the.
Well, #1 according to the Bloomberg Business
Well, in business schools, for sure. So, and thank you for that, by the way. We appreciate it. Yeah, absolutely. There's the people who come here have already excelled in academics as undergrads, and often with prior advanced degrees. So academics is very important. We would not be a part of Stanford University if we weren't providing that. Yes, those other things are really important. They're more important to some people than to others, and that's our job as faculty is to keep people focused on the academics and remind them that that's what they're here for, and that's going to create value for them in their careers later on.
So I just want to know on that 3-pronged stool, beer?
No, I over-indexed on academics. Because it was,
me.
I mean, I went kind of late. It was, I had a lot of catching up to do.
All right, I just wanted to check. All right, so Kate, let's bring you in on this, because the political economy is so important. And I think about our world at large, whether, war in Ukraine, Russia, supply chains, pushback against globalization. There's so much going on, the money and influence in politics, which ultimately impacts the economy. What is it that you hope students who come here to get an MBA at Stanford, what they walk away with and what they think about when it comes to political economy?
Yeah, I mean, that's a brilliant question. So I think what's most important to think about is governments intervene in markets all the time, everywhere. There's not a country in the world that doesn't have, different pieces of legislation, important regulatory changes, high-profile court cases that shapes the market environment, right? So you want to be able to understand how government works so you can make some reasonable forecasts about how policy might change, because those interventions, they create winners and losers, right? They impose direct costs, but they create opportunities. So the idea is to be able to anticipate policy and then reformulate your strategy in a proactive way.
If I can follow, in terms of the money in politics, how does that skew and make it so that maybe when it comes to the U.S. economy or the global economy, that we either get more out of it or we don't get as much as we could maybe get out of it if there wasn't so much money in politics?
Yeah, I mean, I think it's important to keep in mind that the U.S. is one system, right? So one advantage of, allowing lobbying is that it's above board, it's on the table, you can regulate it and you can be transparent on it. But there's other models, like the UK has much less money in politics and more like state funding of campaigns and more of a level playing field. So I think it's important to look around and appreciate how different markets have different governance institutions.
Professor Casey, I'm wondering, from the students that you interact with, are you seeing a good portion of them go and work for governments, go into public service like you did earlier in your career? The reason I ask is because business school is expensive.
Yep.
And you need to cover those costs. And a lot of people do come to business school with the idea that they will leave earning in the top income bracket. How do you reconcile those things?
Yeah, so I think those are important trade-offs, and obviously students have to find their own passion and their own pathway. One of the things that I've always found important, because I've worked, for the World Bank and the government before, is that the skills that you get in an MBA program are incredibly valuable in running large public organizations. So we don't have a lot of students that go into government, but the ones that do, I think, are incredibly well equipped, to run efficient, impactful organizations.
And then you have one that becomes the Prime Minister of the UK.
Exactly.
Or even the flip side of that is you work for the government for a while, and then you go and you work for, in the private sector, and you get paid handsomely for that.
Dean Oyer, come on in, because I want you to talk about the co-teaching model that happens here at Stanford. Tell us about it and how it helps students.
Right, so the foundation on which the academic side of the MBA program is built is we have faculty that are at the cutting edge. They're writing papers that are really leading their research fields. And we ask them to be very practical in their teaching. And sometimes a way to take that practicality to the next level is to actually find somebody from industry or some sort of practitioner to come in and co-teach with them. So I'll give you a couple of examples. There's a finance professor named Ilya Strebulayev who co-teaches two different classes, one on venture capital and one on private equity. He's teaching those with partners in those types of firms. Incredibly valuable courses. The students, the complementarities between the practitioner and the professor, where, Professor Strebulayev, Ilya will say, here's some of what the research shows on this and that, and then the partner will come in and say, well, okay, but let me add a little context on how it works in the real world. And then he'll say something about, we don't quite understand why that is. And then the professor will be like, well, let me give you a framework let me put that in the context of the so-and-so model that will help put a framework around that and give you some ideas. So I once co-taught a class that was with a guy who had been a partner at McKinsey. And that was a class about inequality, so it was a little more about public policy issues. And I'm a labor economist. I would bring in a lot of what the research said, and he would be like, he was the top economic advisor to...
He would be like, Paul, in reality...
Yeah. And he was the top economic advisor to Governor Newsom, and he would be like, okay, here's how we get these things done. Here's how we take that and get it done.
Is it 50-50 in scenarios like that? Are they in every classroom with you?
So the way things, the beauty of Stanford and like the blessing and the curse of Stanford is our courses are just really at the discretion of the professor. And so some of the team teaching will be like, somebody will do 80% of the talking or really drive the discussion. Others will be 50-50, sometimes more the practitioner, sometimes more the lecturer. Some of our classes are case-based. Many of our classes are more experiential. Some will be even a little more traditional lecture, not very many of those anymore. So it really varies.
It's interesting too, Kate, you talked about political economy, political economics, and you're right, there's different models. When I was asking about money in politics, there's different models, US versus the UK. There's also, we talk about the world, and so often we're talking about the developed world. You do a lot of work in the developing world, where great ideas come from, but there's also tension. So tell us about how the importance of bringing the emerging economy into your teachings.
Yeah, so we try to have a very global perspective in the course. So, just to give you some examples, we looked at political risk in oil and gas in Argentina. We looked at mobile money and how do you fit in with the central bank regulators in Nigeria. We looked at, political risk around auto manufacturing in India, right? And then we look at U.S. healthcare reform. And we talked about, money in politics. That was a huge part of it. So we tried to... I think the message is sort of twofold. One is a little bit of a sales pitch to look beyond the wealthiest countries for opportunities, if that's something you're interested in. And And to recognize that if you think about the role of government, as you kind of move away from the wealthiest countries, the ability of the state to intervene in markets and really shape market opportunities, I think gets more amplified and even more important. So trying to be savvy, trying to understand who these regulators are, who's the politician, like why do they put themselves forward? What are they trying to achieve? What are their constraints? How does the firm fit in with that agenda or conflict with it?
We certainly spend a lot of time, Kate, talking about the challenges that this country faces when it comes to volatility in the markets, when we see high prices. We've also spent a lot of time in recent months talking about the challenges emerging economies face, specifically with a strengthening dollar and how they could be between a rock and a hard place if they have dollar-denominated debt. I'm wondering, in this kind of bizarre world that we're living in right now, to what extent you're worried about emerging economies being left behind, even more so than they have been historically, as a result of what's playing out in the global financial system.
I think that's a great point, right? I mean, and it's incredibly challenging, and I think it speaks to, like, this is a truly globalized world now, and what happens in the U.S. and what happens in Europe affects every other country, right? And I think when you think about your ability to raise capital in one environment and bring it to bear in another, all of these things become extremely complicated.
Well, you know, when you think about what's really wonderful is in reading about Stanford and just the coverage that we've done over the years, you know, the experiences that students have, the experiential learning, that is such a big part of what you folks do. And I think about the real life events just this year, the crypto market. You know, Dinoyer, how do you guys incorporate that in? What comes up in conversations that ultimately may help you guys develop different courses you want to, you know, teach, or different programs that you want to have here at Stanford?
Yeah, that's a great question. We're constant. The curriculum is a living thing. It's moving very quickly, and that's where the practitioners and the lecturers can be very helpful, because they can jump in and add topics in a way that the faculty. The academic research market is a little slower, shall we say, to develop. And so the topic...
Especially some of crypto, that if you think just in the last 6 to 12 months, what has happened.
Exactly. And you know, now, having said that, our finance professors, of course, are adjusting and talking about crypto in the relevant contexts in their classes. So we do stay on top of that, and students ask for, we want to learn about crypto, and we try to add courses or content around that. You know, the business school has to be a vibrant place, because we want to be very rigorous and academic, but we have to be relevant. We're trying to train people to go out and manage actual organizations, and they have to learn things in the context in which that's going to be done.
Metaverse? You can't laugh. You're in Silicon Valley. Can you laugh at the metaverse?
I think you can. I think it's allowable. We'll allow it.
We'll pass on that one.
Dean, you're sitting on your book right now.
Oh my God!
There it is.
How did that happen?
Goes to the
Oh
game.
my goodness!
How to throw away $580 million and other surprising insights from the economics of sports. We have it there on the cover if you're watching us on the screen on Quick Take or at Bloomberg.com or on YouTube. How do you throw away $580 million?
Well, the title comes from the NBA strike, which was about 10 years ago now. And I'm a labor economist. There's one chapter that's all about why athletes get paid so much and why some have long-term contracts and some don't. And then there's a contract about collective bargaining agreements, and that's the example
that's the labor
that generates
economist in you.
the 580. That's the labor economist in me. The book is about sports more generally, so like maybe one of my favorite parts is about the story of how you should think about whether or not to invest in your child's sporting career, or why. Maybe my favorite thing, to be honest, is this story about why Korean women are so great at golf, which when you think about it there's no good reason for that, but it's, at least to me, it's all economics. And you know, I turn on SportsCenter and I see economics. I'm a little weird that way.
Listen, we've done, you know, broadcasts from just before the Super Bowl. You know, we call it power players, because athletes have become so influential, the amount of money in sports, and now that gaming and gambling is getting much more involved. Just got about 40 seconds or so left. Final thoughts from you in terms of when you think about the importance of your students.
Yeah, I mean, this is like a gift to be able to interact with them, and they're here. And what I love about them is they're very passionate and they're very ambitious, and they go off in all kinds of different directions, and it's wonderful to see them flourish when they leave.
Dean Oyer, just about 20 seconds. What do you hope when a student comes here and gets an education? What do you hope they walk away with? One thing, very important. I hope they come up. I hope they come up with a broader view of what they can do to influence their organization and influence beyond their organization. All right, we're going to leave it on that note. You guys, thank you so much. Really
Thank
enjoyed
you.
this. Good luck
you.
with the book.
Thanks a lot.
Senior Associate Dean Paul Oyer of Stanford, of course, and Professor Kate Casey, Associate Professor of Political Economy, Carol Masterton.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, it is Bloomberg Business Week, watching and listening on Bloomberg Radio. Carol Master along with Tim Stenovic. And when I think about the Bloomberg Business Week MBA surveys of top business schools, you know, this is something that students, prospective students, really look into.
Oh, it is something that they're proud of or they're disappointed in, depending on where they're in school.
Exactly.
It's a very big deal and plays an important part not just in what happens after you graduate, but also in where you choose to go.
We've got a couple of students coming up in just a moment. First up, though, let's get to your top business stories. Here is Charlie Pellet.
Thank you very much. The big rally hit a wall today. The S&P down 3 points, lower by 0.1%. The Dow down 194 ahead of the jobs report, down 0.6%. NASDAQ up 14, a gain of 0.1%. This update brought to you by Jewish Communal Fund. For 50 years, philanthropists at all levels have turned to JCF's donor-advised funds to streamline their charitable giving. Visit jcfny.org. The 10-year yield, 3.51%. Spot gold, $18.02 the ounce, up 1.9%. West Texas Intermediate crude, up 1.1%, $81.42 a barrel. After the bell, we heard from Marvel Technology. Shares down now by 6.9%. Parler and Ye have terminated their acquisition agreement. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. So we've talked with the Dean of the Graduate School of Business here at Stanford. We've talked to some faculty, and now we've also talked to some famous alum, but we've got to talk to the student body.
Oh, we've got a couple students here with us right now. Two current students in Stanford's Graduate School of Business. We've got Charlotte Meerstad joining us, as well as Cengiz Jamaloglu, both here with us at Bloomberg's, at our setup at Stanford's Graduate School of Business. You guys both have really interesting paths to getting here. Cengiz, you're from Turkey. Charlotte, you're from the Netherlands. Cengiz, I want to start with you and just getting into your journey and why you ended up choosing Stanford. Because when we do these rankings, I don't want to say we because I actually have nothing to do with it.
I have nothing to do with it. but we have a team at Business Week that does.
Yeah, I mean, Stanford's one of those schools that scores highest when it comes to compensation, networking, and entrepreneurship. So how do you think about those things when choosing a school?
Those are all quite important, but for me, actually, what was more important was what was going to grow me most as a person. What institution was going to make me the best version of myself that I can be and make me more introspective and be more attuned to what type of person I want to be, what type of leader I want to be. So I did anthropology and philosophy undergrad, actually, and worked a couple of years as an anthropologist, like kind of similar to being a journalist.
Worked here in the U.S.?
In Denmark, actually,
Okay.
at a Danish consultancy firm. So going around and helping companies and governments and nonprofits get to understand the people around the world. So I would go and live with children or, you know, consumers of a particular product or citizens of a particular country and try to understand why they do what they do. And I did another year on venture capital. And coming out of that experience, I felt, hey, I don't really actually know. Why would anyone follow me? If I one day want to be a leader and want to build something and change something in the world, I need to better understand what are my strengths and how can I best use them so that other people feel also energized by the same causes that I feel energized about. So that's the reason I chose GSB, because Graduate School of Business at Stanford really has a big focus on that introspection element and teaching you the types of skill sets that will make you the best leader you can be.
I love that leadership. Charlotte, what's your story that got you to here at Stanford?
Yes, so definitely a lot of what Cengiz shared resonates with me as well. My background is in arts and engineering, and I was working as an engineer in climate before business school, first on Hyperloop technology, and then at the Netherlands Aerospace Center on decarbonizing aviation. And in those roles, I noticed that even though I was enjoying the challenge and content of engineering, my brain just always wanted to go one level higher. Like, why would someone buy this? Aren't we just shifting emissions to another mode of transportation? What would be the policy implications of doing something like this? What policy would have to happen? And I actually discovered that with my engineering background, I wasn't able to answer those questions. And at the same time, similar to Cengiz, I was also thinking a lot about would I want to start a company? Would I want to have a leadership role in a company?
Do you want to start companies?
I do, yeah. Me probably straight out of business school, yeah.
And me down the line.
Okay, so that's what's so interesting because I mentioned this earlier when I was in business school. One thing that I noticed about my classmates is that nobody goes to business school for self-discovery, to like kind of search for what they want to do. It seems like in order to be successful, you have to know what you want to do as soon as you get out, and you have to have your eye on the prize. So Charlotte, what did you want to do entering, and has that changed? And what are you going to do when you leave?
I think for me, coming in, I was pretty focused on entrepreneurship. And then at the beginning of first year, just so much career options are thrown at you that I think I briefly expanded. But then during the summer, after I was doing my internship, reflecting, I actually became very sure again that I do really want to start a company and that I'm very excited to just bring something into the world and see whether I can build a team, and that just feels like a really great way to both go for environmental and human impact. Also because people spend so much time at work, actually shaping a culture is something that feels like a very cool and challenging and exciting responsibility to me. And it's something we talk and think a lot about here at Stanford as well.
Cengiz, I want to go back to something you said about why, getting your journey here, and you talked about the importance of leadership and learning leadership skills. When you think about leaders, there's a lot coming at them. Employees are looking at them for direction. There's pressure when it comes to big issues like climate change or wars or globalization. What are the role models that you kind of look up to in the business community?
There are so many. I think one role model that I can look up to is Ray Dalio, for example. And the reason I would choose him is because of the principled nature of his leadership. I think one thing that Stanford Business School has shown me is that what great leaders have is a set of principles that they really care about, but at the same time, a flexible mind on allowing yourself to change those principles as you grow and learn more about yourself and more about the world. So that kind of conviction and firms that kind of conviction into a set of principles, but also willing to flex them and change them as you grow, I think is the type of value set that I aspire to have and look up to.
That was such a good question. I'm going to steal it and send it on over to Charlotte. What about you? Who and what do you look up to?
I think I've really changed my view on leadership since coming to Stanford. I think I came in seeing leaders as just having this one fixed style of leadership, and I've really come to appreciate range in leadership. That's something we work a lot on in the so-called experiential classes here at Stanford, where we will experiment with behaviors and leadership styles and get very direct feedback, action impact focused from our classmates. And what I think about as leadership now is actually having this toolkit, and Stanford has expanded my toolkit really greatly, and basically having this whole range of different behaviors. And to me, people who model that very adequately, I'd say, for example, both of the Obamas show this spectrum between very collaborative, warm leadership, but also being able to set a very firm boundary. Yeah.
Well, I wish we could talk more. We wish you good luck. We've got to run, but really great to check in with you. Really appreciate it, and wish you both so much luck going forward. Cengiz and Charlotte, thank you so much.
Let's get to world and national news. Nancy Lyons is standing by in our D.C. newsroom. Hey there, Nance.
Thanks, Tim. The Senate has approved a measure that does prevent a potential rail strike.
The yeas are 80, the nays are 15. One senator responded present. Under the previous order requiring 60 votes for the passage of this joint resolution, the joint resolution is passed.
The measure was approved by the House yesterday, so it now heads off to the president's desk. It's the first time since the 1990s that Congress has stepped in to intervene in a national rail labor dispute. President Biden and French President Macron say they are on the same page on most issues, from Ukraine to climate change, but they agree more discussion is needed to assure that America's new subsidies for industry do not hurt European economies.
President Biden said he's confident Macron's concerns can be addressed.
There's tweaks that we can make that can make it easier for European countries to participate and or be on their own. And we're going to continue to create manufacturing jobs in America, but not at the expense of Europe.
Macron said he doesn't doubt U.S. goodwill, but worries about unintended consequences. And he'll also talk to European leaders on boosting their key industries. In Washington, Irv Chapman, Bloomberg Radio.
President Biden's student loan relief plan will be taken up by the Supreme Court in late February or early March. The justices have declined, though, for now, to lift a federal appeals court decision that is blocking the program. At the World Cup, Japan defeated Spain. Germany beat Costa Rica. Earlier in the day, Croatia and Belgium played to a draw. Morocco defeated Canada. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Master along with Tim Stanovic. Hey.
I'm trying to pull up a story.
Do you have an implant from Elon Musk in your brain?
I'm busy here.
I'm just saying.
If I did have a Neuralink implant, then maybe I wouldn't have to, check my messages to find this story.
You would have
right?
stayed with me. Listen, this is something. Ashley Vance has a great story out on the Bloomberg and talks about what's going on with Elon Musk and his Neuralink company. And apparently it's aiming to start putting its coin-sized computing brain implant into human patients within 6 months. The company announcing at an event at its Fremont, California headquarters. That happened last night.
Okay, before you say no thanks, which is my initial response to, an Elon Musk
anything being
product
implanted in my brain?
implanted in my head. Think about the opportunities that this has for people who do not have use of their legs right now. And that's the pitch that Elon Musk is making right now. The goal of the brain-computer interface, it's known as BCI, is initially to allow a person with a debilitating condition, such as ALS or perhaps suffering the after effects of a stroke, to communicate via their thoughts.
Right, so this is actually an implant that can go into the spinal cord, right? And if you think about it, how often when we talk about disruption, we're talking about fintech, we're talking about, I don't know, how we view things in terms of content, but the healthcare space, many would argue that there is still so much to be done, so much to be disrupted in terms of care and types of methodologies.
I think that's why you still have executives, despite, many of the, I don't want to use the term antics, perhaps, but the tweets that we see from Elon Musk and what we know from what he's done at Twitter thus far, you still have people coming out and saying, this guy is really changing technology by leaps and bounds in this country, in this world, because he's pushing the boundaries in a way that's, not trying to get people to click on ads necessarily, maybe on Twitter, but by doing this stuff with Neuralink and with the Boring Company.
I think of our conversation earlier with GM CEO and Chair Mary Barra. The whole auto industry, I think safe to say, was really awakened earlier, by Elon Musk and his pursuit of EVs, and you wonder how he might be changing the healthcare space ultimately going forward. Read more.
debates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Marvel Technology shares tumbling 6.2% after hours after giving a lackluster sales forecast, indicating that the decline in demand for chips continues to spread outside of the computer and smartphone industries. It was a down day for the S&P 500 index, ending little change, but still down 0.1%. The Dow dropped 194 points, giving back some of yesterday's surge, lower today by 0.6%. NASDAQ, though, built on yesterday's advance, up another 14 points today, up by 0.1%. Big rally hit a wall today ahead of the jobs report tomorrow morning. 10-year yield 3.50%, with the 2-year yielding 4.22%. Spot gold up 2%, 18.03 the ounce, while West Texas Intermediate crude was up 1%, 81.40 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live at the Stanford Graduate School of Business. And before we wrap up today, our special broadcast from the campus, we wanted to get to one more student who is actually tackling, she's a graduate, she's an alum, but she's tackling one of, I think it's safe to say, one of our biggest challenges of all time.
Yeah, Nicole Rojas is joining us. She's Stanford Graduate School of Business, class of 2022. She's the co-founder of a platform called Lasso. It's a company that's working to help farmers track their methane emissions. She joins us right now from Wisconsin. Nicole, good to have you with us this afternoon. Break down for us what Lasso does, because I think if you've been paying attention to what happens in terms of carbon emissions, we all know that the raising of cattle, the raising of beef, and what goes into agriculture is certainly a large contributor.
Yeah, Carol, Tim, it's so great to be here. So thank you for having me on. At the end of the day, what Lasso does is it makes a business case for on-farm emissions reductions. If you're a business or a farm and you want to implement a new practice, it has to make financial sense. And in order to make financial sense, you have to have data to back up showing that you're doing what you say you're doing, whether it's to back up claims that you're making on your brand or to apply for external funding. And today to get this data, it's really manual, lots of phone calls, farm visits, fragmented Excel spreadsheets. So what Lasso does is automates this largely manual process to make financial sense for the beef and dairy companies, as well as the dairy farmers and beef ranchers.
And you're coming to us today from Wisconsin, right? We see a lot of dairy farming, obviously, there. Tell us about kind of your personal experience of growing up in the area and how that impacted what you wanted to do, ultimately today.
Yeah, absolutely. So I'm originally from Green Bay, Wisconsin, so I'm a proud cheesehead. Happy to be here now, although I'm trying to stay warm.
I knew that was coming.
But, for me, going into this space, it was this fantastic intersection of this industry that's near and dear to my heart as a proud Wisconsinite, but also that has a profound impact on the climate. And what's really exciting about agriculture and working in sustainability here is that we really see it's a win-win. It's both for environmental sustainability and improving the land that we're farming on and the cattle that we're working with, but also financial sustainability, that by doing these emission reduction practices, it's improving the financial viability of these farms.
Well, it's funny when I think about ESG, right? And ESG, Tim and I talk a lot about it going through a reckoning. But I think initially the thinking was, what was the financial impact that climate change was going to have on industries and companies? We know the importance of saving the climate to make sure that we're all around in the future. But that financial, using the data to kind of understand financially how climate change is impacting financially, again, various companies. And I feel like that speaks to what you guys are doing, that you're using the data to kind of get an understanding.
Absolutely. And more than ever now, it makes financial sense. Whether you see government support like the USDA Smart Commodities bill that's, or the grants is $3 billion that's distributed to both farmers and companies alike to support these emissions reduction projects, or even the Inflation Reduction Act that was passed recently that set aside $20 billion for emissions reduction in agriculture. There's never been a better time to address emissions on cattle farms today.
Nicole, take us into the origin story of how you did this while you were a student at Stanford. I think a lot of people who've gone to business school would argue you don't really have much extra time if you're focused on academics, if you're focused on networking, focused on the social aspect, and on recruiting, of course. So how do you do this while you're a student?
Yeah, so the number one reason I came to Stanford GSB was to work in climate tech and understand what a career in climate tech looked like. Stanford GSB, both inside the classroom and outside the classroom, made this a reality. So for me, for example, there's a course called Stanford Climate Ventures. That's a project-based entrepreneurial course where you can narrow down your idea and refine what's the problem you're really trying to solve there. In classes like Startup Garage as well, that really was crucial for us in answering some of the tough questions on what's willingness to pay look like, what's the market size, who is specifically your customer, questions that we needed to answer before we started fundraising for our pre-seed round. And so, yes, I was working on this outside of class, but at Stanford GSB, there are courses that allow you to really focus in on what you're trying to build and what you're trying to pursue.
You know, and it's funny because one of the things that we've talked about with the faculty here and the dean is the idea of experiential learning. And how did you tap into that when you were at Stanford?
Yeah, so I can think of 3 core buckets. I already mentioned the first one, which is Stanford Climate Ventures. Startup Garage as well, I mentioned that. There were additional classes, though, that were more case-based, where you learned from entrepreneurs who, or business leaders who had to deal with similar issues that you might experience. So for example, in my Managing Growing Enterprises class, we had Whitney Wolfhard come to class, and she talked about some issues she had when she was starting Bumble. And to me, to learn from inspirations for me and take those learnings into my own startup is really what I would call part of that experiential learning.
What about when it came to raising money? I mean, how do you raise money for LASSO? But I know that Stanford alumni who've gone on to start companies have actually tapped advisors or lecturers that they've had for seed funding rounds. Talk to us about the fundraising process.
Yeah, it was such a learning process, but I, again, couldn't have been at a better place to answer all of my many questions of going through fundraising for the first time. Whether it was our Startup Garage advisor, Harpy Singh, or the Center for Entrepreneurial Studies with Deb Whitman to answer questions on term sheets, our pitch deck, give us feedback there. That was incredibly helpful. And then all the way to where it all started with that Stanford Climate Ventures. One of the professors, Jane Woodward, is our